Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because schools aren't, so let's get started. So we're back for another weekly recap of the stock market, guys. This is number 2. If you missed the other ones, I'm actually going to be having a playlist of these recaps. You could go back and do whatever you want with them. If you saw the first one, welcome back. Thanks. Now, the last one was kind of long, the longest video I ever made, actually, because I kind of had to give you the whole structure, set up what was going on, what I was doing, and then finally getting into it. So it was kind of like the first day of school when you get that syllabus thing, you go over all the crap that no one cares about. That was basically the last video. Now, it had a review in that video as well. It wasn't completely wasteful, but hopefully you guys had a good week this week, because the stock market definitely did not. So let's get into that. So I'm actually trying to figure out what we're still doing here. Obviously, I'm trying to get the hang of it. I'm probably going to be showing you images of Yahoo Finance just because I use them. I like them a lot, and it's fairly simple. So now I'm going to show you what happened in the market. This is the Dow Jones Industrial Average, or Dow Jones, or Dow, whatever you want to say. Most people say Dow, but mentioned a few times before, and it is 30 of the largest companies in America, and obviously we could see it went down, like damn. It actually dropped 1.4%. So there were a couple of reasons why this happened. I'm going to be going into those a little bit later when we go over the index fund that we have in our portfolio thing we got going on. So we'll talk about that in a little bit. Alright guys, so let's start off with Apple. Alright, so most of these things, they're actually going to be in the negative because the overall market was in the negative. So we could see in Apple here, they did drop along with the market around 1.2%, kind of a slap in the face, but that's what happens in the stock market. It was kind of doing okay, like midweek. Obviously last week we had the North Korea scare, so a bunch of things were going down. That's kind of fading away. That's kind of what the market does. When a big thing happens in the market, everyone's like, oh my God, then people forget. It might come back later, we don't know. But it was kind of starting to rebound, then stuff hit the fan, and that's why we're down. Now, if we look at our little portfolio thing going on, we could see that our returns, kind of toward the left side with that mini chart under that, the return, so far since our holdings of 2 weeks, we are still slightly up of 0.71%, so not too bad since we did get in. And I want to focus on the chart we have to the right here. Last time I kind of neglected it. But obviously you could see along toward the bottom of the chart, it goes back around a year. So October, November, obviously hit it low in November. That's actually kind of when we probably should have got in. But it increased since then. And if you kind of see toward the right, there is a little, like a little box notation thing, says B64 at 156. That's actually telling us, which is kind of cool from this chart, it's telling us when we got in. So as the weeks go on, it'll show what the market does and along when we got in, which is pretty cool. So moving on to the next stock in our little portfolio is Disney. Now actually so far this year they're getting slammed. But for this week, they are down 1.6%. And sorry if I forgot to mention, when I say it went down by a percentage, it's not what it shows you right there of that 0.67%. That just tells you what it did for the last day it closed, which was Friday. So on Friday, it closed down that percentage. And along with our little chart over here, we can see since we got in 2 weeks ago, again, I did not schedule when to buy in. I just wanted to get in to show you guys. Probably would have been the worst time to get in because we're down almost 6.5% on Disney shares. They're just getting annihilated because I think it was earnings probably a few weeks ago that killed them. Along with, they do own ESPN, and they're seeing those numbers starting to decline. So a bunch of people and analysts are basically focusing on those numbers. Could that be a buying opportunity? Who knows? It's definitely interesting. I'm keeping an eye on that one. We'll see when it happens. It could always rebound because it's Disney. Disney World. You got Star Wars. They friggin' own them now. But let's move on to our next stock is Facebook. So again, like the overall market, there's going to be a bunch of negatives, bunch of red this week, guys. Facebook dropped around 1.3%. And let's look at when we got in. We're actually down by around the same number of 1.3%. So since we got in, we're unfortunately down with these guys. And moving on to one of my personal favorites, Fidelity Contrafund. This is a mutual fund that I personally own. I'm not saying you should buy it. I'm not saying you should sell it. I'm just putting it out there. But Fidelity Contrafund is a mutual fund that holds a bunch of growth companies. They went down 1.4 or around 1.4% this week. Now a quick fun fact, a bunch of the companies that we're actually tracking, like Apple, we got Google going on, Facebook, Fidelity Contrafund has those stocks in that portfolio. So technically, for myself, if you're invested in Fidelity Contrafund, you're also invested in, your Facebooks, your Googles, your Apple. So for our returns after 2 weeks, we are negative 1.55% with our Fidelity Contrafund. As a quick side note, how I invest in this mutual fund, Fidelity Contrafund, I like to buy when, things drop. But for this mutual fund, and especially for the long term, I don't know when to get in, when to get out, when I should buy a little bit more or a little bit less. So I just put it in every single month. So the first of the month, I just have it automatically coming out of my account and being invested in this particular mutual fund. That's how I like to set it up. Over the long term, you'll get in some highs, you'll get in some lows. So overall, the theory and the plan is going to be overall up. Alright, so now looking at a little Google action we got going on for this week. Google is down around 1.3%. They're a bit kind of like a tech giant, but again, still down. So looking at our chart over here, since we got in, we are still down with our Google position. We're down 1.86% after 2 weeks. Let's look at the chart a little bit. We got in around $927. It's down to $910. But you see it's fluctuating. It did jump in like mid-July, then it dropped. So, it could continue dropping if the market continues, but it could also rebound. So that's why I'm still in it for the long term. Or should I say we're in it for the long term, because this is our portfolio kind of, guys. So if I'm making money, you're making money. Right now we're losing it, so you're losing it too. Sorry. But remember, we're in it for the long term, so do not get disappointed. Talking about disappointed, next one is Starbucks. For this week, they are down 1.2%. Why I said this is kind of disappointing, because look at that damn chart. Beginning of June, they peaked just over $64, and then bad news after bad news, earnings and stuff. They closed Friday at just under $53. They closed at $52.70, and we are down almost 5% with Starbucks, guys. Damn. Quick thing with Starbucks, why they are actually down when they announced their earnings. It's called Teavana. It's basically, they have overpriced coffee. Teavana's overpriced tea. But in malls, they have these little stores, I guess you can say, and they sell these Teavanas. Well, recently, obviously, malls have been decreasing in popularity. So with Teavana in these malls, it's not doing so hot. So they're deciding to get rid of it completely. Over the years, they're just, ripping them out of malls and getting rid of Tivana completely. This is seen as like, oh, this is a bad thing. Sales are being destroyed because of it. But I think it's a kind of good move. If it's not doing good, then just divest in a declining business feature that you have. So now let's get into the more broader market. Instead of just individual stocks, we got the S&P 500. This is the index fund. They have 500 of the largest companies in America. They are down by around 1.3%. All right, again, looking back at when we got in, we are down 1.9%. But let's start talking about what actually happened, why it went down so much in just a week. So like we kind of mentioned, like all over the place, guys, news articles could hit and destroy the market. Last week we had the North Korea scare that they're going to bomb Guam. If anything's going to come of that, we don't know. But this week is a little different. The first thing that actually went off that interested me was Warren Buffett, the billionaire stock picker. He owns Berkshire Hathaway, Berkshire. I still don't really know. But he actually divested or sold all his shares in GE. I'm going to put up a little stock picture of GE. They have been doing horrendous for this year, actually. I believe he said they were down like around 20% this year so far. But a bunch of bad things were happening with GE. I mean, supposedly, I know the CEO is stepping down, and they're just not doing as good as they used to. So obviously, once Warren Buffett told the public this, people started getting out of GE, the overall market dropped, because, he's like an oracle of, what the stock market's going to do. Obviously, he doesn't know exactly what it's going to do, but a lot of people look up to him. So if he's selling out, other people are too. So that shaked the market up a little bit. And there were also some earnings that came out that hit the market even further, which is why the overall market and the Dow, S&P, they dropped over 1%. So the first thing that actually got hit was Walmart. I'll put up a little thing right there so you can see. Walmart got slammed from their earnings. And another one very similar to Walmart is Costco. They got slammed this week as well. So they're both in this index fund, or the S&P 500, the Dow. So they got slammed, making the index get slammed. So since we're in this kind of like bearish, I don't know if I ever explained that, but like a bull market is when it goes up, people are bullish, market goes up. When people are bearish, market goes down, or they're expecting lower returns. So speaking of lower returns or bearish, Nike also came out with some numbers and they got slammed, especially on Friday. I'll put up a chart right now. You can see they got slapped. So now, along with Warren Buffett getting out of GE, along with some bad earnings of Walmart, Costco, and also Nike, we also got our President Trump, again, doing some things, whether you agree with him or not. There is things going on. He's basically firing a bunch of people. I know one main guy, I think his last name was Barron, I want to say. But one of like the White House members, I believe he got fired. So obviously when kind of a bad thing happens there, that affects the market as well. So again, guys, with these bad earnings and bad things looking at the White House, this made the market just kind of stumble a bit. And last but not least, we have our risky small cap fund we got going on. Again, I'm not completely educated about small cap stocks. I don't know a lot of them just because they're small companies. We obviously know the big ones. We know Apple, Google, all those cool guys. But the smaller companies, you have to do a little bit more research. So that's why I'm personally following this index. It's following just a bunch of small cap companies. They got hit this week. Down 2.2%. So looking at our holdings for these small cap companies, we are down almost 3.7% since just 2 weeks ago, guys. So this is actually a good comparison of, you could see that the regular market, they just dropped by just over 1%. With small caps, the small guys, they dropped by like double. They dropped just over 2%. So you could see the risk and return there. You could see that it is more risky. They dropped by double the amount, but in the same idea of the returns, let's say if it rebounds, if let's say the Dow or S&P 500, if it goes up 1%, the same idea applies. The small caps could jump by double that of 2. So the overall market is kind of an iffy place right now, guys. It is kind of bearish. I do kind of believe it could go a little bit lower. I'm definitely not getting in on it. I could be wrong, who knows. Again, with my mutual fund, I'll keep investing in it every single month. But I kind of am waiting for like a correction for it to drop significantly. That's a buying opportunity. That's when I want to get in. So that's the basic idea, guys. Hopefully you enjoyed this one. And I think it was a little bit shorter than the last one. But again, with the news that we're actually going over, I'm not going into too much detail. I just want to, throw out main news stories so you know them and how it affects the market. So if you have any questions, comments, concerns, leave them down below. And don't forget to subscribe to my channel, Real Life Money. We talk about real life and money because no one else is. Thanks for watching, guys. Again, I'll create a playlist if you want to, go back and see the previous recaps that we have. I'll leave them there. And I'll see you next week.